Mr. Giorgio Costantino holds the position of the Executive Director of Global Transformation Services CRIF Group. Mr. Costantino, after graduating, joined Accenture in the year 2000. He spent 14 years with Accenture Management Consulting. In 2015, he joined CRIF as Director of Management Consulting. In 2018, as part of the evolution of the company into a fintech and digital solutions provider, he took on the responsibility for global transformation services. In 2024, became a member of the board of directors of Full Farm, a venture capital and startup studio focused on the launch of startups and open innovation services within the area of artificial intelligence and blockchain. The title of Mr. Costantino's keynote speech is ESG and Banking Challenges, Assessing Impact of Climate Risks with Advanced Analytics Models. Dear Costantino, Mr. Costantino, the floor is yours.
Thank you very much. Thank you very much for the presentation. So I have at least 20 minutes, 15 minutes. And I will try to accompany you to the cocktail. So I will try to give you some snapshot of this. So first of all, I would like to thank the association and so the Director General, so the Mr. Kamas, and the Chairman, Mr. Nicolaou, for the invitation and all the public authorities. I'm very glad to be here in this very fantastic isle. I'm very sorry for the English, but let me say I learned Greek at college, because you know that in Italian guys has this kind of Latin and Greek during the college, but I'm able to read and but not to speak. The title of my presentation is the ESG Banking Challenges. Even the governor of the Bank of Cyprus and so the public authorities are talking about challenging of ESG sustainability. You know, this is the challenge. Despite all the economic and macroeconomic impact, this is the challenge. I'm working around the world, and this is the only word that I am talking about, sustainability. And my personal point of view, it is that finance will be sustainable or will not be in the next future. And so we are a lot of working on that. Even the SSM, the Single Supervisory Mechanism, put at the second priority the climate and environmental transition. And so for us, I put also CRIF within the environment on financial institutions. It is crucial to drive in some way the transition. Only 2 words about CRIF, because this is only to present the company that I represent as a global executive director. CRIF is a global company, and I would like only to say this to you, because all the cases that I will go to present is the result of global experiences around the world. I have been in Asia also, in Taiwan, bringing some kind of ECB regulators there to try to boost this kind of challenges there. And so only to say that the figures are the one that you are going to see. It's 1 billion. Our aim is to be a 1 billion company. We are more than 4 continents and more than 6,000 employees. So very briefly, I will try in the next 10, 12 minutes to go through some real cases. First of all, an introduction about the climate risk. Climate risk is something real and concrete. I really apologize because the examples that I'm showing to you are not about the heat stress or the kind of, let's say, damages that you may find in Cyprus. But let me say, this is to say that the damages might be very, very strong and potential. So we are talking about 9 billion, for example, during the flood in Emilia-Romagna, Italy, about 2 billion, more than 2 billions in Greece. And this is another case in Romania. So these are European cases that we would like to show to you that is very, very concrete. And this is a chart that I shared together with the European Central Bank. The European Central Bank shows to Taiwan together with me to show to the banks the channel of transition between physical risk and credit risk. So you know, whenever you grant a loan to a company with a collateral, you are exposed to a physical risk. And the physical risk can be transmitted in a credit risk, because due to the local floods, the heat stress and some kind of different damages, the collateral, the value of the collateral might decrease. And in this sense, finally, if the company defaults, and we are also doing some kind of analysis on that, at the end, you have not the big grant that you may have in front of, in order to recover your exposure. And the concrete examples of this is this evidence from a pool of clients that we did in a European country, where you can show that the low flow risk versus the high flow risk has a very higher LGD, the loss given default. The loss given default is the bank's proxy to the expected loss. So more than 15% for the consumer, more than 6.5% for small medium enterprises, and more than 10% for corporates. So this is the tangible and concrete example of the potential losses that we may occur if we not manage the climate risk. As CRIF, we are working a lot around the world, and mainly Europe, to try to support financial institutions and banks to assess the climate risk. And thanks to the very, very great relationship that we have and the partnership that we have with Artemis here in Cyprus, we still, and we have already developed something for Cyprus. And my personal and our personal commitment as analytics and consultancy, which is the department I manage at the global level, it is to try to continue to support this kind of evolution and models here. Very briefly, the methodology is very simple. We have three drivers. The first driver, so I would like to mention, the first driver is the probability of an event occurring where the asset is located. This is the crucial point. And the other point, it is the vulnerability, the third one. So the expected economic impact associated with the event. I don't say nothing that I think that all of you are coping with this kind of concepts. In the middle, you have the scenarios. And as CRIF, we invested, and we are still investing every day, in one word, the granularity. So in the terms of the probability of occurrence and for the vulnerability, we did a partnership with a very, very specialized company to have a very high resolution hazard maps. I did several comparisons also with other maps provided by the government, but we are ready to have a very, very, let me say, very strict automatic geocoding to enable a very, very granular hazard. On the other side, thanks to this partnership, we are, let's say, assessing the history of the vulnerability around the world. This kind of partnership that we have with very specialized company worked a lot with insurance companies. And the insurance company have the histories of the losses. And the combination of the two, so the probability of occurrence, very specialized, and vulnerability, thanks to the history of losses, together with the climate scenario, and we are using the official one, enable us to have a very, very granular methodology. Some example, very concrete. This is a Greek example. Let me say, it's very funny. I would like to share with you this because, let me say, we need to understand, for example, in Greece, where the bushes and the wild trees are. So sometimes we can manage, we can cope with the regulator, meaning to say in some areas you are not exposed to the wildfires because it is not a general exposure in Greece, but in all the cases that you are bushes and wild trees, you are most exposed. This is an example of how much precise should be the methodology. The same same accuracy we have to say in terms of how close we might be to the rivers to be exposed to the flood. Second case, you need to know where the buildings are located, but not if are located in that place or next to the floor only, also. But you need to know also the precise characteristics of your collaterals. For example, a building entirely located at the second floor has a low risk collateral than a building located between the ground and the second. And this is what ECB is asking. We supported several financial institutions to fulfill the Pillar 3 disclosure for the climate risk, and every time ECB is asking this kind of granularity. Finally, you have to backtest. And so I mentioned before the Emilia-Romagna flood in 2003 in Italy, a very big disaster. Several companies defaulted. We did a backtesting, and as you may say, the flooded area is, let me say, is the orange one. And the cliff risk forecasted is the blue one. There is a very, very strong overlap. So for example, we counted that 0% of, almost 0%, let me say, 95% of the buildings identified as low risk were flooded. So if we forecasted a low risk buildings, these buildings were not flooded. And more than 50% of the buildings defined as medium high risk were flooded. This is the precision, this is the accuracy that ECB is asking as of today to the banks for the losses that I mentioned before. The bad news for Cyprus, because as I mentioned before, we are already working with Cyprus. The bad news is that you are, let me say, a country very vulnerable to physical risk. No? And this is something that also ECB is mentioning. And Cyprus is one of the most vulnerable European regions for the heat stress and water stress. It's a reality, okay? But let me say, I skipped that slide that is show you, and I will leave you the slides at the end. The good news is that on the other side, we calculated the transition risk, and given the composition of the industries in Cyprus, let me say, only let me say, two main industries like the mining and oil and gas and utilities, for the characteristics of the industry, are so strongly exposed to the transition risk. What does it mean? You know, the climate risk and the transition risk are like, let me say, a balance, no? Because you have to manage, as of today, the physical risk, but thanks to the composition of your industries, you need to understand how many emissions you have to manage in the next future, and you have to calibrate the impact of the physical risk as well. And so this is a good news for Cyprus. Let me bring some conclusions, because I may be out of time. First of all, we have a booster in Europe, and the booster is the European Central Bank. I personally create every year in Italy, but in the next few years we are trying to organize this around Europe, a meeting together with the CROs to try to discuss directly with ECB and EBA. And they confirm that this is the focus. Even the person that I invited in Taiwan told to the Taiwan guys and to the Taiwan guys managers that ECB, by the end of 2024, wants to have, and the expectations are including in the capital adequacy and the stress testing, all the, let me say, forward-looking and strategic approach. And let me say, the regulation is still evolving, because we have taxonomy, we have the GAR calculations, and so far, so forth. This is what we are doing as CRIF. I don't want to go through this, but only to underline that to manage a sustainable finance, you need to work with information and analytics both. What I'm telling in all the environments, not only Europe, it is that the future of managing the sustainability finance and ESG will be to work with different sources of information. Very different sources of information. Think about the biodiversity, for example. The biodiversity is another source of information. And what we are doing as 𝐓𝐫𝐽 is trying to have a big data lake and try to exploit this for having a score and the rating. Let me conclude with the words of the person that I really, really appreciate and estimate personally, that he is Andrea Enria, now deputy, because he is not anymore the chair of supervisory board. We share, let's say, the nationality because he is Italian as me. But let's say these words are very strong because, let me say, we know that climate change is severe and potentially existential for any one of us. And so we need to prepare everything. I think that banking environment is a little bit better prepared than the other industries. It can help the other industries to, let me say, drive the transition. Thank you very much.